Okay, welcome to part 2 of my KLIMA DAO series. So right now we are going to dive in and get you to be a master of DeFi on rebase tokens. I'm going to get you to understand all of why Olympus DAO is revolutionary and what it does differently and its forks. So KLIMA, for example, a fork is just somebody who copies the source code and then tweaks a few things and then deploys it as their own, right? And we're going to talk about that crazy APY, why it's okay, why it's there, what purpose is it serving. We're going to talk about how rewards are paid out. We're going to talk about how novel revenue is generated for the protocol, etc., etc. So let's just jump right in. With first off, let me pull up my notes. Why Olympus DAO? Why do we care? Let's get a little history lesson. Okay, so in the land of DeFi, these decentralized finance projects have been existing for a long time, and something that's very important for them is liquidity. Okay, so liquidity is the concept that I can buy an asset or sell an asset at any time that I want. So if you think of like a penny stock, or even better, equity in a private company, you start a startup, you make an LLC or whatever, you sell 10,000 shares in your LLC to your buddy, and great, he's got the shares, but if he wanted to buy or sell them, it's going to be really tricky for him. We call that illiquid, right? He'd have to go through a lot of work to find somebody in specific to sell them to. Whereas if you want to buy or sell Apple stock, there's always a buyer and a seller, and so you just, put your order in and it gets filled. Sorry, my cat's going crazy. So liquidity is really important for decentralized finance projects, just like it is for, stocks and bonds and such, because if you don't have the liquidity, then even if your idea is good, it can die because people are scared of being locked into it and not being able to get rid of it when they want. Okay, so basically the Olympus model does two things really well. It builds a large treasury, and plenty of projects before it did that as well, but it builds a large treasury, and then it controls its own liquidity, and that's really important. So let's just talk a little bit more about that. So traditionally, if I wanted to go buy, we'll say KLIMA token or Olympus token, I would go onto SushiSwap. Okay, so SushiSwap is like a decentralized exchange. You go onto like Coinbase or Crypto.com, a centralized exchange, and you are basically swapping your US dollars for crypto tokens or coins, right? This is a decentralized exchange, so all you do is you hook up your crypto wallet and then you swap one token for another token. Okay, so in this case, let's say we want to buy KLIMA, and maybe we just use US dollar coins, so that's always going to be worth $1. So, you say, okay, I want to buy $1,000 of US dollar worth of KLIMA, and I get 6.65 KLIMA. Great. And I can click this, and it will execute within like a minute, and I will get my KLIMA. It's like very liquid, right? And importantly, you see here, I end up with about $994 of KLIMA. So there's a, what is that, a 0.4% fee, 0.6% fee that gets, it says it right there, a 0.6% fee that gets taken out and paid to basically the market maker, the person who's supplied a bunch of US dollar coins and a bunch of KLIMA, and they're letting me switch them because they have both of them. They can switch back and forth. So traditionally, you would start a project and you'd have your coin. And then people who had a lot of your coin or token, they would go and make a pool like this to make some fees, right? Like making 0.6% every time somebody buys or sells is pretty nice. You don't care if they buy or sell, you provide both sides of it. You're just trying to make those little fees. And then, but it's a little risky, like somebody could buy up all your KLIMA and then you have none left. That's a little rudimentary, but there's some risk involved. And so what would happen is, let's say that there is a Lollipop protocol. Okay, so you were providing Lollipop tokens. And so Lollipop would say, hey, if you go provide liquidity, we'll pay you an extra 5% APY a year because you're doing a service for us. You're letting people buy and sell, and that's important. And we recognize that it's important. So that was great and dandy, and that worked for a little bit until somebody, let's say Tootsie Pop came around, and they copied Lollipop's code, but they said, hey, if you provide liquidity for us, we'll give you 10% a year. And then, sorry, this cat. So now everybody who had Lollipop and was getting 5% a year, they say, well, it's like the same thing anyways, let's sell it and go buy Tootsie Pop and provide liquidity for Tootsie Pop. And then Tootsie Pop would all of a sudden have all the liquidity, and so everybody who had Lollipop would get scared because they can't sell or buy Lollipop very well anymore. Or when you buy, there's like a 3% fee, and that's not very great. And so they sell, and Lollipop dies. It shows up and dies without liquidity. Well, but then some other protocol copies Tootsie Pop and does 30% a year and 40% a year. And what ended up happening is, if you were a DeFi project, you had one of two options. Pay a fee to your liquidity providers that's so high that it strangles any profit from your protocol, and you basically end up being unprofitable. So why do you exist? Or B, your liquidity dries up, and then people leave the project because it's illiquid. So it was a big issue. Well, Olympus came in and they said, hey, what if we just provide the 1 million tokens and we hold on to those 1 million tokens and we get all the fees from the liquidity? We can promise that we will never run off the Tootsie Pop because we have a vested interest in the success of Olympus, right? Like, it is the Olympus DAO. It's controlled by only people who hold Olympus, and so they will always vote for it to keep Olympus liquid. Has a vested interest. And that was revolutionary. So not only do they have this large treasury that they get, but now they control their own liquidity. Okay. How do they actually control their own liquidity? Well, they have a big bank of 1 million coins or whatever that they keep to themselves. But the other thing is that they have these crazy APYs. Let's look at KLIMA's right now. So let's go back to the homepage. KLIMA right now is at like 27,500% APY, which means if you had one KLIMA in a year, you would have like 270 KLIMA, which is just crazy. Okay, so why have such a crazy APY? Well, what it does is, over time, the price of KLIMA should go down, and the amount of KLIMA tokens you have goes up. And in theory, that means that you have the same amount of value in KLIMA, right? But if you have to stake your KLIMA, so it's called S-KLIMA. And if you don't stake your KLIMA, which you can do anytime, like you can stop when you want, you can start when you want, there's no penalties associated, etc. So you will always have it staked. It's a no-brainer. But if you stake it, you can't provide liquidity for KLIMA because now you have S-KLIMA, which is actually a different token that just will always be the same price as KLIMA because the DAO will always trade it in for you. So that means that if I bought a bunch of KLIMA and wanted to provide liquidity here, I would make some fees, but I would be getting diluted, right? Like, KLIMA is inflating, but I'm not getting any of the extra tokens, so the price of KLIMA goes down. My supply stays the same, and my overall value goes down. So much so that it's unprofitable for me to provide liquidity. And that means that KLIMA keeps it all, and they keep all of the fees generated. In fact, if you look at KLIMA, always another link that you forget to add. If you look at KLIMA here, you can see that in its 3 months of existence, it has generated $10 million in liquidity fees, which is kind of crazy, right? That's 1/25 of its market cap in 3 months in just trading fees that it gets to capture because it doesn't let other people capture it. Okay, you should have a question in your head right now. If other people lose value by providing liquidity for KLIMA, why does KLIMA not lose money from providing liquidity for KLIMA? Okay. the short of it is this. Actually, let's go back to this figure that we used from the last chart. So 1 carbon ton, which is the backing of KLIMA. Oh, this is a great time to talk about backing. It means like how the US dollar used to be backed by some amount of gold. A KLIMA token is backed by 1 BCT, 1 base carbon ton, which you can see right now costs about $5.50. Okay, now what that means is even if like the protocol went under, it dissolved, it disappeared, like there was no more KLIMA, what they would do is they would trade you, with their last dying breath, they would trade you their carbon tons for your KLIMA, and then you would have the $5.50 worth per KLIMA token. Okay, but the KLIMA price is $190. So what happens is you will bond into KLIMA to get new tokens. Okay, so you give them basically $190 worth of BCT, and they give you 1 KLIMA. So that means that you're giving them like, what, we'll say 30 base carbon tons, and they give you 1 KLIMA. Okay, so they take that 1 KLIMA, they go and make that 1 KLIMA that they made, they give it back to you. They say, there you go, there's the sweet deal that we gave you. And then they take the other 29 KLIMA, and maybe they take 1 to pay for the DAO's expenses, like employees. They take 2 to add to liquidity pools, and then they take the other 26 KLIMA, and they pay it out to previous people who have bonded and own KLIMA, aka that's where they get the money to make new KLIMA to inflate the treasury and pay it out to people. But you still always have 1 base carbon ton per KLIMA, right? Because you got 30, and so you can make 26 new ones and still have 1 base carbon ton per. Okay. What that means is that KLIMA can make KLIMA tokens for itself for $5.50, even though you have to pay $190 for KLIMA. So even though the price goes down, KLIMA got these tokens on the cheap for $5.50. They're not hurting because the price went down. They also don't value these as something in the treasury because the price of it can go down, right? So they don't say that they're like making all this money from the KLIMA that's at a higher value. But what it means is they don't actually lose value from KLIMA's price going down the same way that you or I would, because they made it on the cheap. Additionally, if they took these extra tokens and staked them instead, then they'd get new tokens, but those new tokens would be the treasury making tokens and then giving the tokens back to the treasury. So there's no like value add for the treasury, right? Yes, there'd be more tokens, but it's the same amount of assets in the treasury. So it doesn't matter that they stake their own token because they'd just be paying themselves. I will give a disclaimer. Theoretically, KLIMA can lose money through impermanent loss. I'm not going to go on a big tangent about impermanent loss here, but the short of it is that if KLIMA price goes way down and USDC stays the same, which obviously USDC will always stay at $1, then KLIMA could lose some money. But basically, the risk of losing some money through impermanent loss is less than the risk of... I'm so sorry, my cat is just going wild. The fees that they get to capture from providing liquidity. So that is why KLIMA can do it and you cannot. Okay, while we're talking about this APY of 27,000, I want to get to one other point. You do not need an APY of 27,000 to make it unprofitable for people. You could make it unprofitable with an APY of like probably 1,000%. You could guarantee that it's unprofitable to provide liquidity. So why so high? Okay, so this goes into a bit of game theory and Ponzi, and you need to step back and understand that Ponzi in the world of DeFi is not necessarily evil. It's just talking about this kind of like growing adoption from different people. So at the beginning, there's no reason for the first person to buy KLIMA or Olympus, right? And so they give you a reason. They say, we're going to give you a really high APY. And So I put in 1 token right now, and I'll get 270 tokens in a year. That's great. And then I give them 30 tokens of value, and then the next guy gives 1 token, and they get 30 tokens of value, and they pay out 5 of those tokens to me. And you can see that it keeps going, and hang on, the last person isn't going to have anybody following them. It's a Ponzi. You've got to have new investors to pay out the old investors, right? Right, to a degree, but over time they'll slow down this APY, they'll crank down this Ponzi, and then they have this novel revenue that they generate from the Treasury that should be able to cover everybody's expenses. And so it's an everybody wins Ponzi game, basically is the way that I would say it, if the protocol works out. If it doesn't work out, then the last investors do indeed face the brunt of the issue. So this is just a bit of game theory that says, you know, hey, if we both stake, if we both just sit there and let our tokens grow and nobody sells, then on paper the price doesn't go down and our value goes way up, right? If we both sell, then it's worthless. There's the Ponzi part, you know, and you would have kind of this flash crash, not to zero, but to the backing price. So, you know, when you're trading at a 30x multiple, that's quite the drop. Okay, but the important part is that these protocols use the treasure trove to make real revenue to cover the tail end of the Ponzi scheme. And so that's why it's not okay to just know that they build a large treasury and that they own their own liquidity, but you also need to know that these projects are going to do something with their treasury. So in the case of Olympus, they say it right here. Basically, they say, we're sick of people using the US dollar for decentralized finance, because if the US dollar were to be way inflated, then like the value of all your cryptos is going to go down because you're keeping it in US dollar. So what we're going to do is make this other currency that people can use that'll be more stable than Bitcoin, because Bitcoin's way too volatile. That has some intrinsic value because it is backed by US dollar, but it can float on its own, blah, blah, blah. And they've executed very well on this. They're now in all these lending protocols and they're achieving their mission. In the case of KLIMA, the mission is a little bit different. It is, let's go buy a bunch of carbon credits, back ourselves with carbon credits, and do 2 things. 1, make the price of carbon credits increase, thus the price of our KLIMA token increasing. It's like if the price of gold goes up, then the price of the US dollar would go up. And 2, we'll do the same thing as Olympus. We'll make this reserve currency that people can use to not be pegged to the US dollar, but instead of being backed by the US dollar, we're going to be backed by carbon credits. So you like totally move away from a centralized finance backing. Okay, now let's just finish up this video with some math around this backing price, current price, etc. Okay, so in my last video I explained to you how even though the price can go down to 550 and the price is at 190, well, dropped a lot, it's at 160 now, you can make good money, more than double your money, if you wait with that APY, right? Sorry, give me 1 second. Okay, that kind of. Now that's the promise, is that KLIMA will always be backed by $5.50, right? However, if you look at KLIMA's treasury, which this is the dashboard to look at everything in KLIMA, you'll find that sometimes KLIMA will have more than 1 carbon credit per KLIMA token in their treasury. In fact, right now it's a lot more than 1 carbon credit per KLIMA in their treasury. Right now, there is about $80 worth of stuff in the treasury per KLIMA. What is this stuff? So first off, let's go ahead and just say there's almost 6 tons of carbon per KLIMA, okay? Or $30 per KLIMA instead of $5.50. But then there's other stuff, and in total you make up $80 worth of value. All right. This right here is the market value of treasury assets in US dollars. So this is going to show us all of the treasury assets. So what we have is BCT, base carbon tons, great. We have KLIMA BCT, that's a liquidity pair. Specifically, it is this liquidity pair. Toucan protocol base carbon ton, KLIMA liquidity pair. This fee of 0.3% is going straight to KLIMA, because when you make this trade, KLIMA is the one that's giving you one or the other. Okay? So let's see, that's what? KLIMA BCT, that's $30 million. So you almost double versus what you have just sitting in BCT. Granted, half of that is more BCT, right? It's KLIMA and BCT. And then you have BCT USDC. So that's interesting because it doesn't have to do with KLIMA at all. But KLIMA decided to provide liquidity and make fees off of this trade. Right here again, 0.3% fee, it's going to KLIMA. So they have US dollars in their treasury, even though that's not what they promised to back it with. They've got $42 million in BCT USDC liquidity, which means about $20 million worth of US dollars. Okay? $20 million of US dollars and 1.3 million KLIMA means you've got $20 like in US dollars per KLIMA right now in the treasury. Now on top of that, you have this other, $80 million of like KLIMA and BCT and stuff. And so in total, you have $100 million of treasury, which comes out to about $80 per KLIMA. That's wild, right? So if you think, oh, it's not $5.50, it's $80, we're getting back into crazy land. This will deflate with time. It will keep dropping, but not for a while, right? And the other thing is, this means that even if no new money came in the treasury, you could basically end up with about $80 for every KLIMA that you have. So instead of thinking that you're trading at a 20x, let's see, 150, so a 30x of the backing value, we're really trading at like a 2x of the backing value. And you see that makes it a lot less risky. So that's a really important factor to understand, that there's more to the backing than just the asset that is the promised backing. Okay. In fact, you could make a vote, and the DAO could vote and say, hey, we're now going to support 2 BCT per token if they wanted. Like, you could officially change the backing that they will always promise. But regardless of promises, right now they have more stuff per KLIMA, and that's important. I feel like there were some other things I want to talk about. So market cap, I went over this in the last video, but it is price of the token times the number of tokens. It's at an all-time low right now, which for me means it's a good time to buy. Okay? Because that means a lot of money has flowed out, but what hasn't flowed out is all of the value in the treasury that they've kept. Okay, so people have left, but this treasury number doesn't really go down. It fluctuates because BCT price will go up and down, but it basically, I mean, you can see the market value of treasury assets, like, okay, so it goes down, but in general it's been going up. I mean, if you look at this, treasury of 40 million to now 110 million, and a market cap of 500 million, a billion, down to 200 million, it's a no-brainer. It's a better deal now than it was then. Okay. That was probably a lot to digest, but you're starting to get all the tools you need to understand these rebase tokens, is what we're going to call them. We call it a rebase because 3 times a day they pay out the interest, and we call that a rebase. And how to value them, and how they work, and what numbers matter. Again, APY does not matter. It matters a little bit at the beginning to drive some adoption. We're kind of past that phase, in my opinion. And now it's just there, you just ignore it, and you look at market cap, because that takes the APY times, the inflation times the price. And basically what I'm saying is we are at a very good deal right now. You could stop the video right now, but I think I will just play around with numbers just a little bit more for you in this video if you want to look at some more numbers. I'll do a lot of this in the fourth video, a lot of speculative pricing, but I just want to talk through some things. So we say that if KLIMA goes to $5.50, you more than double your money. In fact, we're down to 150 now, so just about triple your money, right? Obviously, if the BCT price went down to $3, then this could go down to $3 and you would lose a lot of that value. But I'll get into this in the next video, but what you're going to see is BCT has been a lot higher, like $8, but it hasn't really dropped below like $4, $4.50. And there's some things in the works that'll make it even more not drop that low. In reality, if KLIMA ever hits this price, well, let's just look at the chart of Olympus. Olympus's official backing is $1, okay, $1 US. And I believe the lowest it ever got was 180, 160 maybe dollars. So 160 times its promised backing. Now its actual backing was probably more like $30, $40 at that point, so it was like a 5x multiple. Maybe even higher, maybe $80, like what we're at. We have not seen a protocol that's based off Olympus, except for a scam protocol that has no way to ever repay the Ponzi, drop to its actual backing price. So this is actually kind of a doomsday scenario. In my opinion, in a year, we will still see KLIMA above $30. That's just my personal opinion. That's speculation. But looking at the Olympus chart, the fact that it is still higher or about the same as its launch price so much later. In fact, if you look at Olympus, let's see here. We're at an index of 60. That means that if you bought one Olympus on day one, you would have 60 now. So its supply is 60x and the price is the same. Again, so if you had bought on day one, you'd be at about 60 times profit right now, despite all the ups and downs. That says to me that, wow, sorry, I'm clicking everywhere. KLIMA's price is not getting down to $5.50. Unless it failed or was a scam, and that's where you have to go in and research the team and trust the team and see what they're doing. You see the partnerships that they're making, you see that they're making ties in the real world like they should be. And to me that says this protocol will survive as long as it survives. Right? It doesn't go to zero and have to pay out its treasury per token to people. We're going to see it trading at multiple. I think $30 is fairly conservative. I think we could see this as high as $60 in a year. Not on some random peak, but just as kind of the baseline price. But at $30, you are talking about 15x in a year. With the adjusted APY. With BCT price not going up. And it's low right now. It's lower than carbon markets, like fair price for it, which we'll get into in the next video. And if KLIMA accomplishes its mission, this could go up, you know, to say $10. And then this would be $60. Very, very appetizing buy at these levels. The first time that I bought KLIMA personally, it was at $1,200. And so you can see where I did the math and said this is a good buy. And my risk is fairly high, but I'm willing to do it because it's a good buy and it might be a great buy, right? But down here, when we're at 2x, our treasury, it's an incredibly good deal. We could see ourselves in 6 months, we've gained all the new tokens, and we're back at $400. Obviously the APY wouldn't be this, but you know, gosh. I could see this in 6 months, realistically. So this is how I look at the token and I value it. I say, how down should the price go? How up should the inflation go? Basically, you're saying, how should the market cap go? And what I'm saying in the case of KLIMA is that I think the market cap could get back to $1 billion quickly, which would be a 5x on your money or a little bit more. And I think that it will continue growing past there. Okay, next we'll go into carbon markets. Thanks for your time and watching.